Welcome to DeepTech315. Our first topic this week is maybe micro crash is how the week started out. The NASDAQ down 5%. We had the issue related to some of the hedge funds and trading around the yen. We had the jobs number, the hot jobs number last Friday that showed the economy slowing down a little bit more than expected. And we had this vortex of the market, the NASDAQ trading down. And since then, since basically Friday's close, the NASDAQ now is down 1.3%. And so call it down 8-ish%, 9-ish% year to date. And man, that was a crazy one day. A lot of movement going on there. And we kind of been expecting this event. We didn't know what the event was going to be, but we're kind of expecting and almost like hoping for a pullback here.
And I think when you're trying to predict a pullback, it's an inexact science. And then when you're trying to recreate the story of why the pullback then happens, I know that's everybody's favorite game. It's not really a game that's worth playing. I think the game worth playing is looking forward. And
Right.
where are we at now? What does it mean in terms of this AI bull market we've been in? I think if you look at the Mag 6 in particular, that's the easiest place to start because everybody was so worried about them being, expensive. And if you look back 3 weeks ago when we were at the high of the NASDAQ, the Mag 6, so excluding Tesla for this comparison, was trading around 32 times forward earnings. I looked at it the other day. They were down to about 26 times forward earnings. So we've had a drastic pullback in those valuations. And if you actually look at the span of where the Mag 6 has traded in the last 10 years, the peak multiple for the group is about 38 times. The trough multiple was, I think it was either 18 or 19 times. So we're right in the middle of that range. I don't think we're even expensive anymore. I don't even think we're a little expensive. And looking forward, that to me says, obviously, as long as we don't have any other, exogenous events, market crash issues, recession, it feels to me like the big cap tech stocks are pretty reasonable.
Definitely the right exercise to look forward. There is some helpful historical context to the pullbacks. Of course, we've talked a lot about these 11 or 12 pullbacks from 94 to 99 on average. That was greater than 10% on average, 14%. So we had that, as I like how you described it, this market clearing rate when there's kind of some anxiety from investors. They get jittery. It's like that 10, 15, 20% kind of clearing rate. We had that. And now we see the VIX dropping from, call it 65 to 25, had this significant recorrection. And it, I think, leaves me with a sense that we can do just that. We can start looking forward again and focus. And I think it's important to kind of get some context too to what happened with large cap tech on the June quarter. Overall, the numbers were slightly better and the guidance was essentially in line. That's probably the summary. And so in CapEx growth going from previous to the June report around 35% growth expectations on average to 45. So I think when you put all this together, the AI train is on track.
Yeah, two things. One is you mentioned the VIX thing. I actually think there's some inside baseball there where the VIX posted, it was like a 60 or 65 number, but I was reading some trading reports. You couldn't really ever trade it at that level. The futures never got there. So I think the actual way you should look at the VIX is it got to like the mid 30s, which is still high, but it wasn't as high as I think some of the numbers showed, even though we had a really volatile period for a couple of days there. Set all that aside, again, we're looking forward here, not backwards. All that's irrelevant. When we think about this AI train that we're on, I also just put it in simple logic. If this is the biggest technological paradigm shift we've ever had in the history of humanity, it's hard to believe that it's over right now after 15% pullback. That would be shocking. And in fact, if that were the case, I would argue that then this isn't the moment for AI. What we're going to be talking about in a year or two is that AI was a total bust. That's the only thing that would make sense if this is the end.
Unlikely that happens. Let's jump to our second topic, which is Google got a verdict from a district court, DC district court, related to them paying essentially for placement for search. And this is their distribution world. They pay different third parties to have search be the default. Of course, the best example of that is what they pay Apple a year. It's was rumored a year ago to be $13 billion. Now the judge Mehta, who had this, it was in his court, said it was $20 billion. either way, it was a big number. Overall TAC, the traffic acquisition cost, generally is about 50 billion, or was 50 billion in calendar 23 for Google. It's been growing about 6% a year. So they hand out a lot of dough to get placement. And my first question, let's forget about the ruling and we'll talk about that in a second. But my first question is, since Google is a verb, it's a habit, there's really no one to touch Google today. Well, who knows how the AI piece plays into it, but why are they paying 50 billion a year in TAC?
I think you could argue it's both offensive and defensive, right? Defensive in the sense of why risk one of the most beautiful business models in the world? Don't even let another search engine try to impede on that territory. Right. And if the cost of insurance is $50 billion a year, growing 6% a year, and you can grow your business, 10, right? I think it's a pretty good trade. Yeah, it's a pretty good trade for defense, but it's offense too. I think this I think is part of the question that's at issue here. When Google was a much smaller company, I mean, it's been a verb for a long time, but in establishing itself as a verb, I think they were really smart and creative early on, doing deals with AOL, right? With Ask Jeeves, if you can even remember back, Ask.com later on.
Good one.
And getting, right, yeah, these other search engines that were smaller, they didn't have the same level of technology. I mean, these are decades plus year old deals that are irrelevant today. But I think that playbook from back in the day helped establish Google as the preeminent forerunner, made Bing kind of irrelevant. And now we're kind of dealing with those issues here.
So a little bit of a trick question too is that, let's say that this gets appealed and the appeal doesn't hold up, or the appeal is unsuccessful, the judgment holds up. Are we going to view this as a positive for Google? I think consensus is amongst tech followers is that this is probably going to be a net positive for Google.
It could be, and I know you tweeted a little bit about this, but we used to cover a company called Yandex, the Russian Google, back in the day. We helped take the company public, and they had sort of a similar issue where it wasn't exactly the same, but they were basically removed as the default search engine in, I believe it was Firefox at the time. And Yandex is such a good search engine. It's what everybody wants to use, just like everybody really kind of wants to use Google here because it's so good and reliable. What they were able to do was sort of promote to customers that would then direct navigate to Yandex, hey, this is how you can make Yandex your default search engine again. And in that case, they weren't actually paying for the placement. And if I remember correctly, net, it was a positive for them because they were paying less in TAC, obviously. They didn't end up losing that much share. And I think the bull case here is that's maybe what Google can figure out how to do, is stop paying for these deals and just rely on the brand, rely on how good their technology is.
Yeah, that insurance comment that you had, I think that perspective is helpful here. That's probably what's going on in their minds. I think this would be a good thing for Google. I don't think it's actually going to come to fruition because just shifting the topic in terms of the actual judgment, it's worth noting that the Department of Justice brought this on. It went to the District of Columbia, DC's district court. That court is historically leans less favorable to business. It has generally a little bit more of a liberal stance, I would say, to kind of some of its business. And it is, when you think about the ranking of the courts that can go, it's kind of number 4 in the rankings. It can keep going up to other courts and ultimately at the Supreme Court. So there's 3 other courts above it. And if you're curious, the percentage of Supreme Court when a District of Columbia judgment reaches the Supreme Court on appeal, the Supreme Court overturns it 62% of the time. And so it's still a long way away from this being determined. There, of course, is a remedy that potentially could come out because it's on appeal. The judge may not actually enforce a remedy because it's such a big case. May just say that we're just going to hold off on the remedy until the appeal is settled, and that's probably 2 or 3 years down the road. If there is some sort of near-term remedy, I would be shocked if anything happened to that $20 billion payment. I think it's going to be more procedural versus financial. And so I just want to kind of give some context, is that not all courts are the same. And of course, Google is going to fight tooth and nail. It does beg the question, it's worth just having the conversation, is that what if I'm wrong? And this ends up holding up, what does it ultimately mean for Apple's $20 billion business?
Could
Of
go away.
pure margin.
Right. Yeah, it could go away. Is
Yeah,
in a funny
15.
way. This
Yeah,
is
one more. Yeah, 15% of their operating income. So I'm
right.
sorry.
Yeah, I mean that's in a funny way. It's actually a probably worse ruling for Apple
It
than
is.
it might actually be for Google,
Agree.
counterintuitively. And I would say this. I mean, for all of these rulings, it's hard to predict ultimately what the outcome is going to be here. It could be some fines. Could be that they start to unwind some of these agreements. But at the end of the day, you look across all of big tech. I mean, we're going to be talking about antitrust lawsuits next year, the year after, probably the next decade.
Fair.
This is just going to be a persistent part of all these companies' stories. And, investors, I think at this point, right, there was minimal reaction from the markets when this came out. And I think a lot of this feels like it's maybe not fully baked in, but at least
Well, but yeah,
expected.
it's not fully baked in. But what is the model? Let's say you're Tim Cook now, and this ruling happens, and they say, let's say the remedy is you don't get the 20 billion. What's the business model around selling your distribution? Does it go to a choice page that whoever is selected? Because this is what happens in Europe. There's choice pages today, and whoever is selected, Apple would just take like a revenue cut. That would seem like a reasonable business that would be okay with regulators.
Could be a choice base. I would imagine, though, that it'd be a significantly less lucrative revenue cut than what they get from Google. If it's a mechanism of choice versus being we are the
Right.
preferred default vendor, it's a different situation. Um, the other thing, I remember, a decade ago, we're going to go back in the history books again, just like Yandex. We had predicted at one point that Apple would get into the search business, and they
Mm-hmm.
never really did. Or, Siri was not that in any real way. But maybe the answer is they need to think about building their own search engine and trying to capture that monetization themselves, because it's a pretty big business to
Yeah.
give up. $20 billion a year is a huge business.
Yeah, that may be the catalyst. This may be the catalyst for an announcement in the next couple of years before that appeal is ruled on. Let's jump to our final topic, a quick one here related to Anduril. They, of course, are the defense tech company that is really heavy on technology. They just raised $1.5 billion at a $14 billion valuation. The last round was maybe a year and a half, 2 years ago, at around an $8.5 billion valuation. And for those of you who don't know, Anduril, they kind of compete with, they're kind of the next um, defense tech company that would go up against Lockheed Martin, Northrop Grumman, RTX, those types. So those are $100 billion ish type of companies. 14 billion feels like there's still runway here for Anduril to keep going higher. It is an investment, and we do own it in our private fund.
Yeah, and I mean, the company has been, I think, one of the most creative companies, maybe in all of technology, in many different ways. I mean, first of all, I think how they've kind of approached building their systems. Traditionally, the defense tech world, the government sort of goes and asks for certain things to be created, and Anduril takes much more of a software forward approach, where they kind of build the product, they show their customer, and then they sell the customer through that way. So I think that's been one of their innovations. And the other is how I think they've been aggressive in expanding the business through acquisition. They've acquired everything from rocket engine companies to unmanned underwater vehicle companies. I think when we think about this $1.5 billion raise, everything's on the table. They're certainly going to continue to invest in their core systems and expand the product lineup. But I also think this might give them some more capital to continue to be creative on the acquisition side as well.
And as I said, 14 billion, it's got some meat to it here. I think this is a public company in the next 2 or 3 years. We'll be back with Deep Tech before then, and see you next week. Bye for now.